Market levels report for September 25th, it's Tuesday, has some very interesting activity, supply and demand events taking place in Eurodollar. We have Eurodollar coming down, testing, just trading slightly below this 1.2900's level, but the delta volume distribution continues to expand lower. So we have additional evidence that newly initiated sellers keep piling into the Eurodollar. So far, they're not able to drive the Eurodollar lower. So what that means when you have market order sellers that continue to initiate newly initiated selling, new directional trades in Euro, but the market's holding, that means we have limit order activity that's doing a lot of absorption of this selling, this market order selling. So that means we have different entities trying to do different things at the same time. We do have some short inventory that's been accumulating into, as you can see right here, the market sold off. We did have a rally, but sellers continued to sell into the rally. That's a delta divergence. Large liquidity participants continue to sell into rising prices, and they were able to get the market to trade lower. We do have sellers selling again. From this point to this point, they're selling into the Eurodollar lift again. We're going to see some struggle in here today. Now, what I will say, this is what's important about this area. If we start trading through this 2960's level, we are most likely going to get some capitulation starting from those that have been selling from this point going forward. They're going to start unwinding some of their held short inventory. Bust through 2964's could actually accelerate short covering, and the euro could start picking up some momentum, trading back into its previous range. As it stands now, I think it's very likely the euro could come back right back down and retest lows. But if we get enough newly initiated buying and we get some sort of change in the order flow bias, and we're actually getting some buyers coming in, because what might start happening is those smart money that's short for much higher pricing levels may decide to start buying to cover to take profits. And if that buying to cover starts hitting the euro, that will be strong enough to change the trend of the delta volume order flow that we're tracking here, and it could help drive price up to the 2964's area. We start trading up through that area, many of these sellers that are holding down here have a decision to make. They have to hold them or fold them. Most likely, if we're able to trade about another 20-25 pips higher, we're going to start challenging these last sellers into the game that have been loading up in this tight area range of price. So there's a lot of inventory that's been coming into and trading into this roughly about a 65 or so pip range of price. So that's going to be key, that 2960's. Start busting up through that, the market will probably at least trade up and at least test this next level too. If we come down and start hitting the 2900's level again and start trading lower, that could also bring in some covering action of those that are short, saying, yeah, I better go ahead and start taking profits into any new prices offered lower to me than what I've been offered for many days now. So that's the story in euro. It's getting very reactive. Our lowest held level of long inventory, where you can see there really isn't any levels of held long inventory. This market is completely out of balance. Everybody, for the most part, of any significant position sizing is short, and there just isn't anybody holding any long positions of any significant position size, and that leaves this market completely out of balance from an open interest ratio. So we have everybody short and nobody really of any significant size long. Markets tend to not stay in that condition very long. They bounce. They go completely out of balance, and then they bounce a bit. They go completely out of balance, they bounce. They go completely out of balance, they bounce. So this market has had a lot of newly ongoing initiated selling. The market has been able to come down and trade lower than prior, not much lower, but this process is getting a little bit old. It's getting a bit extended, and we're not too far away from a reactionary price level that if we start trading through could trigger a bunch of short covering. So if you start seeing any trends running through the 2964's area, I would say let it get some legs. Don't try to start selling rallies up through this area. This is going to be a critical area that if we trade through, we actually could get upside acceleration of price built on short covering. And real quick for ES, came down, perfectly tagged out, or just about tagged out the previous held level of a long inventory. As soon as we hit the edge of the delta volume distribution, we bounce. So as I was saying yesterday, don't be surprised to see ES come back into its range some, and that's what we've done so far. Liquidated the first level of overhead inventory resistance. As this market rallied, we let go of those that were short, holding inventory from this, what was it, about 1453's, 54's area they've unwound. Now since then, we've had sellers selling into any rally from this pivot point to that pivot point. That is a delta divergence. And we have had the market pull back some after it's traded up here to the 1456 area. ES is sitting just above recent held area of long inventory. Buyers that have bought the 1446's area on up. So we have long inventory now holding, and we have 1, 2, 3, 4 levels of overhead held short inventory, and that's these levels at the 1456, 1458's area, 1462's, and then the highest held level up here on the 1468's. That is the ES. We got the bounce off the major inventory grab with the market trading lower, having this last held long inventory let go. Once we got to the extreme edge of the delta volume distribution, there was no newly initiated selling strength, and the market bounced back into its range. So that's where we are for the ES. We could just as easily come down, retest lows, liquidating this fresh long inventory, just as we could if the euro starts rallying and the US dollar selling off. I would not be surprised to see the ES trade higher on the day following equities buy program activity. So that's what we'll be watching for today in the ES. It's kind of in its middle of its recent range, and it has bounced off the trading to the extreme out of balance open interest ratio we had here just after the open yesterday. If you have any questions at any time, contact us at info@marketlevelsreport.com.